Yes, guys and girls, welcome back to another BMO video. It is Tuesday, the 13th of May. So as you can see, Drew's not here. He's not able to make it today, so I will be doing it today. Nevertheless, let's quickly have a little look at our calendar and see what we've got going on this week. Obviously, we know yesterday we came into a pretty volatile day in terms of good directions for the dollar, good directions for like the yen as well. The AUD also saw a bit of strength, which is obviously good. So yeah, overall, let's see kind of what data we've had. So I am recording this a little bit later on in the day, so we have already had CPI, but yesterday was pretty much nothing. All it was about Trump and what sort of Trump wanted to say about sort of, I think they said a lot about the, what's the word? Healthcare system. Obviously, I can't remember his name, but he spoke sort of early on in the morning in our time, UK time, and that was about the sort of that good agreement with China. So that was really good, and we saw big amounts of dollar strength there, of course, and you might have seen the gap open as well on Sunday when we saw more news come through over the weekend. Then today, what do we have? We have pretty much claim accounts from the UK. Obviously, that's good. Lower the number, the better. Average earnings, 5.5%, was from 5.7 to 5.5. It was expected to come in a lot lower, but we didn't, and we kind of held pretty sticky still. And the unemployment rate rose by 0.1%. As you know, shouldn't really do too much, to be honest with you. And just looking at the reaction of the pound across the board, you can see pretty much stronger against most currencies, barring like risk on currencies like the NZD and the AUD, which you've seen a more weakness or sort of more AUD strength, shall we say. But yeah, apart against like the dollar, we saw a bit of strength. Against the yen, we've seen even more strength. Against the CAD, strength. And of course, against the euro, we've seen a bit of sort of strength on the pound as well. Then German zero, that was pretty good actually, 25 from negative 14. It was expected to come in at plus 10 or above zero, plus 10.7. That's pretty decent. Overall, that should have supported the euro a bit more, but we know at the moment that's not really the main theme, right? The data is not really at focus for people. It's just about kind of what is happening with the news about tariffs, and because of euro being so overvalued, people have just been reducing it regardless of good ZEW data, for example. Then, not too long ago, we had CPI. That did come in lower than what was forecasted. However, a bit higher than where we were previously. But overall, the year over year did come in lower, which was quite surprising for a few people. Like, oh, damn, we should have actually seen a bit of a rise in inflation, but we didn't. So that was quite interesting for people. And if we look at the DXY, or just the dollar, we've seen a bit of reversal. Obviously, this kind of data does suggest that the Fed may be able to cut a little bit more than expected. If you look at these, that could give you a good gauge of it. But we've seen overall, though, not moved by much. But you can see how volatile we were at the 1 o'clock candle, which is this wiki candle here. And then Bailey is speaking at 4. Let's see. He's speaking at some bank association. Nothing maybe of importance there. We'll just have to see what was mentioned. Wage data from Australia, 0.8%. New loans, and overall, as you can see, pretty quiet for Wednesday. Thursday, employment data from Australia. That's about average, so that shouldn't really do too much. Unemployment rate is expected to stay the same. And then GDP from the UK is obviously very important. And you can see how quarter on quarter is expected to do a pretty decent rise from 0.1 to 0.6. So let's see if that is the case. The UK, or the pound, shall we say, is sensitive to GDP data anyway. So let's just see what happens there. PPI shouldn't really do too much, or you shouldn't really move markets anyway. Again, CPI is a little bit more important for a few people. However, PPI might come into focus if we start to see that all of the tariff inflationary pressures come through. Then we may start to see it come in PPI. So let's see. Retail sales expected basically to stay the same. Shouldn't do too much there. Unemployment claims is expected to stay roughly the same. Powers speaking at 140. Where is he speaking? Thomas Research Conference. Okay, so just depends on what questions there are. And then Friday, GDP price index can be quite important for JPY. However, we know if we gauge it off last week's data or last week's wage data, which did come in a lot lower than expected, we didn't really see too much movement. And that's because it's not really the main theme at the moment. Even though technically it did come in lower, it's just people aren't really focused on it. People can only focus on one thing at a time. And inflation expectations from New Zealand probably won't do too much there. SMB Jordan Schlegel is speaking. So trade war, okay, so we can see how the Swiss reacts there. But we know Swiss has been weaker across the board because of risk on. And consumer sentiment is roughly expected to stay the same. This one will be pretty important. Inflation expectations, so people expect more inflation ahead, then they begin to change their habits in the way they spend and save, etc. But yeah, apart from that, that is myself in the news. Pretty big start to the week, of course, mainly on the back of the US and the updates there. So that's probably what we're going to be focused on a bit more, because that's the main theme, right? Everyone's focused on it, so we have to focus on it as well. But yeah, apart from that, that is myself on the news. Let's jump straight through onto the US dollar. So the USD. Now, as you know, yesterday obviously was the main day. Today, what we've seen with the dollar, and let me go on the daily time frame quickly, a tiny bit of weakness, but really not too much. Yesterday was obviously the biggest day and by far the most important, because that does give you a sort of thing to talk about or to think about sort of in the next few weeks or so. Because considering that is the main theme, that's such a large update, and people are, oh, damn, that is pretty crazy. Maybe this does change it slightly, and we've seen that. So if I just quickly show my screen, we've seen that kind of across the board. We've seen it in the S&P. So if you look at the S&P as the index, not the futures, you see that massive gap higher. Obviously, if you go on futures, then you would see that sort of tick by tick, which was here on the 4 hour. And you can see that kind of there in the morning open, and then or the next day open there, and then blah, blah, blah. So that obviously then was reflected into the actual S&P, which created that big gap. So overall, you can see that risk sentiment is getting better. Now, what you now need to think about is, of course, that is also going to support the dollar. Generally, we know that is a bit weird because people's like, oh, damn, like surely it should move opposite. If risk on is coming back, dollar is not a risk on currency. But you think about the context as to why it was so weak. And it was so weak because people lost confidence in the US and the USD. And now that confidence has been brought back because of some trade deals, it makes sense why both will rise, because that was also the main reason why it fell as well. In addition, you can trade that through the angles of like AUD as well. Risk on, very good for China, also very good for AUD as a proxy. And you're seeing that in the across the board, EUR AUD, EUR in New Zealand as well. Obviously, I took a tiny bit of a hit. We did actually, what I've noticed, it's come slightly higher into this supply zone, but nevertheless, the direction is still there. It just came a little bit higher. You can see how it's just coming through into risk on currencies. AUD JPY would have also been a very, obviously we're not looking to sell this, but this would have been a very, very good risk on versus risk off, AUD versus the JPY. So that is the main sort of conjunction, what we need to be thinking about for the dollar, because that is the main, that's the main driver. So China and US trade ceasefire offers a welcome boost to the outlook. So as you know, all you need to think about is, why was the USD so weak in the first place? And it was so weak because of all of this issues since the start of April. And obviously now that there's some sort of ceasefire or some sort of negotiations happening, people are going to become a lot more optimistic. And as a result of that, that should continue to support the dollar until it becomes not optimistic anymore. Until it becomes boring, the news gets priced in a lot. You'd know that you can look through like options as a good way to see if it's priced in, but it's not even been, all of this risk premium, like what ING mentions, hasn't even been pulled out yet. So there's still a lot more room to run for the dollar. We just need to kind of just wait for those pullbacks if you're not in already. Now, we can pause this and read through it in your own time. It's also on their website as well. But you can see how they announced a 90-day ceasefire of sorts on the trade war, bringing US tariffs on Chinese products back to 30% and Chinese tariffs on US goods to 10%. It remains uncertain if the de minimis exemption for products shipped from China and Hong Kong will be restored, or if the minimum fees will remain. These rates return tariffs to pre-Liberation Day levels and better represent a better than expected de-escalation. So obviously we know since the start of April, base Liberation Day was on the start of April. Since then, since the start of April, Trump was like super aggressive, wasn't he? You know, he was doing 100% tariff and doing 140%. Every single day was a bit more news on that. and people were just kind of going against the US because say this is actually going to hurt you more than it's going to hurt them. And obviously we saw that reflected in price action. So now all you have to do is think opposite and think, well, if the dollar was so weak and the reasons it was so weak is starting to fade away, i.e. this, what we saw yesterday, then why are you going to continue to sell the dollar? It doesn't make sense, does it? Now, risk premium is something that we spoke about, obviously in the April period, but it was very much welcomed by the dollar. Of course, the global T rallied 1 to 2%. It has been defensive Japanese yen and Swiss that suffered the heaviest. Of course, there's a risk on, effectively reversing the gain seen in the aftermath in the chaos of the reciprocal tariffs. In terms of positioning in FX, long yen has been one of the most crowded trades, and dollar yen could rally much further, perhaps to 150. That is also what I'm looking at. I did make a reel on that yesterday. Euro dollar has fallen hard. Remember, the euro strength in April was seen as a function of liquidity as dollar aversion grew. So people came out of the US, went somewhere else. Europe was obviously the next best thing. And therefore, the current correction could extend below 111 to 110. I do like that. But we suspect any moves below 110 will not be sustained. I agree. Because remember, you got to think about the future as well. So even though technically like this is good for the dollar in the near term, the longer term, sort of in the next 3-6 months, is not that great. It's a lot more positive for euro. So that's why we're saying, well, that's why they're saying, and obviously we've spoken about this many times already, is that the lower euro dollar goes or the higher the DXY goes, the more inclined you're going to be looking for sells, because at that point you're going to think it doesn't make sense. And then obviously you look for technical reversals like breaker structures or whatever you want to look at. But yeah, that's kind of what we're focused on. Now, at present, our base is that euro dollar trades at a rough 110 to 115 range for the rest of the year, helped in part by lower energy prices. Let me double check where euro dollar peaked. 115. It can go higher than that. Yeah, I don't know. We have been stuck in many ranges before, but we're not even halfway through the year yet. So we're very close to halfway, but we're not even there yet. So we can still have a lot of moves to come. I'd say above 115 if the positive growth things in Europe continues. Now, we'll have a little look at some docs as well. But again, remember, some of this might be a little bit dated because, again, this news flow came through yesterday. Obviously, most of these docs are written, as you can see, on the 9th of May. So let me look at my calendar. What was that? Friday. And Bank of America's doc was written on the 9th as well. So obviously, at the end of this week, we'll sort of get that Goldman doc through and have a little look. But what they say is smile big and wide. There are two themes running through macro markets. First, and a bit more structurally, investors are conscious that the resilience in hard data thus far is not surprising, but still believe it will not last. However, risk off and short dollar expressions versus safe havens will have a natural negative carry favor until the tensions is settled, like the recent drift in June FOMC and dollar yen. Second, and contributing to this buoyancy in risk sentiment, the trade war has progressed to the point where policymakers seem eager to show some payoff. Even though there are reasons to be skeptical, the US and UK have been working on the trade deal for years and not weeks, and a 10% stopping point is not encouraging for our jurisdictions. Prior to the pause, the dollar depreciation mostly against other safe havens, but over the past 3 weeks, a succession of EM had led the way. For those looking for the dollar smile and its usual correlation to risk, it is still there. And we've kind of seen that to a certain degree. We think investors should combine tactical risk on dollar down expressions in EM, such as BRL, Pro, Korean Won, I believe that is. I can't remember which that one is. And hedges in JPY. We think CNY ticks a lot of these same thematic boxes. We're revising our forecast to show CNY strength given the recent direction of policy negotiations and broad dollar depreciation. So they're just kind of be tactical, but obviously this was written before all of this news about the massive update on negotiation. So I would kind of look through that for now. But what I want you to take away from it is just the reasons as to why they look at certain stuff. Why is this summary still here? Keep trying to get rid of it. But yeah, I always try to sort of, even though it might be a little bit dated, it's always good to see kind of what do they look at to gauge an idea, because maybe you could use that as well. Bank of America, what do they say? Let's have a little look. Will trade deals derail dollar bears? And with the benefit of hindsight, it is clear USD suffered from elevated US policy uncertainty. The correlation of daily changes of the DXY to US policy uncertainty indices has mostly been negative over the period. Let me just quickly zoom in. Policy uncertainty has retreated from the highs, And the focus will be, of course, on the impending bilateral trade deals with the US and whether that can reduce policy uncertainty. And of course, the UK and US deal, the first since the liberation date, provides some guidance. So basically, look at how the USD reacts to trade deals, like what we saw when this first deal came through with the US and the UK. We saw a good amount of dollar strength. So that kind of told you that any sort of future deals would have been positive as well. And that's still what we're looking at. Even though we've moved a decent amount, there's still a lot of more room to run on the dollar higher as a pullback, though. Now, you can read through this if you really want to. It's not, again, it's just more things to think about, really. And you want to be focused on what actually is driving, which is more so on the tariffs. So let's see if there's anything here else here that we need to think about. I don't think there is after briefly reading through it yesterday. Some of the trade ideas is euro dollar longs, which is obviously good. And the risk to theirs is US pivots towards more conventional economic policies or an expansion of the trade war beyond the US, which is now we see as having a low probability. And that's their reasons as to why they entered. Some of the other trades here as well, short CADMX, just some of their other trades there. You can see they take losses as well, but normally their losses are capped pretty well. I just want to see what percentage. You can probably try and work out the percentage there. I know Credit Agricole, they have a percentage as to how much they lost or whatever. And similar here, you can kind of work it out as well. But you can see how they still take losses, but their wins are still pretty decent and the losses are generally capped pretty well. So you can use that to your advantage. Now, in terms of technicals, let's have a little look. I mean, CPI obviously didn't really do too much. Again, it's not that, it doesn't seem like it's that deep. Like the DXY is slightly lower, but if this is a normal market environment, we would have been a bit more lower. Doesn't seem like there's much reasonings for a continuation of weakness, if I'm honest with you. Now, dollar CAD, where can we go for dollar CAD? And you can see how the shallow pullbacks push up, aggressive on Thursday, bit of a shallow-ish pullback, more so consolidation, then had a decent rally here, bit of a shallow pullback, decent rally here, another shallow pullback. So if you want to, you can more than welcome to try and go on the lower time frame, try and find an entry for a long. However, I would be more so focused kind of on this region that we first marked out. This is ages ago we marked that out, but that was just these lows just because of how price action has moved in the past. Where we haven't really been coming to supply zones. We've just been reacting from lows and then moving down, reacting like here. There's multiple ways of showing it. So I'll be monitoring this zone. If you go on the daily time frame, you can see the only sort of region would be all the way up at 42,500. It is possible we can get up there, and I'm not going to deny that. However, I'm just going to work with what I'm seeing at the moment, and that's what we're not too far now. Obviously, if you're not in a long already, it seems like it's not that far away. But if you are, that's kind of where I'll be targeting, around 4,500-ish on dollar CAD. Dollar Swiss, obviously this is very good. We saw a bit of consolidation and then a break to the high. We were looking initially at this one. We didn't get that. That's fine. It's not that deep. So we just wait for the pullback. So where can we see a reaction? Well, the only reaction I would see is back into these next prior highs, isn't it? There is no technicals here that would suggest me to go long. So I'm literally, even if it goes higher, it's just the way the cookie crumbles. So I would say, okay, this is just the only region I'll be watching. If it doesn't come down there, fine, I'll leave it alone because it doesn't really make sense for my plan. And there is literally no demand candles down there either, unless you go like on the higher time frame. But yeah, overall, that should allow dollar Swiss to go higher because sentiment improves. Swiss is obviously very sensitive to that. As a result, you could target, if you wish to, around and last higher. So let me just delete this. I would be targeting, where am I? Around sort of these next highs. So around 85,500 to 85, depends on your sort of personal preference, anywhere within that region. So basically those highs to sort of, I've got the magnet tool on, that's why it's like bugging out a little bit. Down into sort of that 85 hole would be anywhere within there. I would be looking to see a reversal, which I'm not looking at. Dollar yen, we will be. So that's pretty much what I'll be thinking about is what would be the reason I go back bearish the USD? Well, basically, the main reasons now would be either US data turns really, really negative and really poor, which it hasn't, or obviously both can happen at the same time, or we see like that trade deal with China or other people just fall through, and then we go back to sort of the craziness that we were at. So for now, I'll be targeting around 150, which is basically this 4-hour supply zone. And it also is a quarter number. 5s, 25s, 75s, and zeros are quarter numbers. So pretty much in there. And then I'll be looking for a reversal. Reasonings for reversal, remember. People will be looking at this and being like, oh, we've broken structure here. Now let me try and sell it all the way to the low. But there's no reason for it to go that low. That's why sometimes you see that and then it does that, or like it rejects from like a demand zone down here, for example. I don't know. And then you get stopped out break even. When in reality, you need to just trade with what is the main driver, or what the probabilities where it should go is higher, isn't it? Based on what we know at the moment. So therefore, we only know we want to be looking for longs. Let me just delete this. So what I'll be focused on, the only region I could see is literally back into about 47 to sort of 46. I'm on it to 47 first. The reason I am doing that is because we've seen previous rejections on around 47 as well. So I'm just monitoring that zone there. 47 here, big rejection from there. Similar sort of region here as well. Yeah, that's the region. Can't see any demand zones. Hence why I'm like, okay, I'm going to have to work with whole numbers here. As you can see, around 47, there's no whole numbers. So that is the technicals. To summarize, again, the main theme at the moment is tariffs, and that's what we focused on, or what we need to focus on. It should continue because there's still a lot of sells in the dollar, basically. And people have to rethink, okay, this news is good for the dollar. Let's reduce our dollar holdings. That would give that boost to the USD. However, as you know, eventually we do want to be selling the USD, but we just need to think of the reasoning when it comes, right? We need to just follow the news, follow the reasons. Dollar stays stronger, dollar stays stronger, dollar stays stronger. And then once something comes like a news or data or whatever, then we think, okay, now it's time to go back bearish the dollar. So that's essentially all you're doing. You stick to a bias until it starts to change. Similar when we were selling the dollar, belonging euro dollar, we then saw something changing, at the start of May, weren't that many more issues. So then we think, okay, now it's probably good to go long the dollar, for example. So it's just do it on the opposite side as well. So that's myself and the dollar. Let's move straight on to the pound. So the pound. Now, in regards to the pound, obviously, we had some data today. So let me just quickly show you my screen and we'll have a little look at that. Again, lower the number for claim accounts is obviously the best. Basically, claim accounts, the amount of people claim for benefits, obviously you want that number lower. And that indicates that job losses or struggles in the economy. And we haven't really seen too much. 20K is roughly the norm, to be fair to you. So I would have expected to come back into norm. The 5.2K is pretty decent. Average earnings, still pretty sticky. So that would indicate basically the BOE to maybe be a little bit more dovish. Not a little bit more hawkish in the future, sorry, because that could indicate stickier inflation as well. Generally, though, in a sort of general market environment. Now, in terms of US pound, let's see. Now, today's UK labour market data had no discernible impact on the sterling. Private sector pay growth is starting to slow, but last month's fall in payrolled employees have been revised up to negative 47 from negative 78, as our UK economist James Smith has been expecting. Far more interesting for the Bank of England will be, of course, next week's April CPI services release. Before all that, however, we have the UK and EU summit on the 19th of May. Expect sterling to stay bid ahead of that, potentially even seeing Euro GBP break below 84. I agree. I remember that sort of trade deal that was mentioned, even with the US, is very good for the pound. We've seen that across the board. So similar to what we spoke about last week, obviously GCAB, we're still expecting more moves to the upside, but similar to last week, actually, where you selectively need to choose who you're buying the pound against. Like you can't just go long the pound versus everybody. When you're seeing like the likes of AUD benefiting in this risk on environment, similar to like NZD as well. So you need to choose the ones that would probabilities would state should go higher. Like, for example, pound Swiss. So you can see that there's now a sort of zone being created. I would actually sort of aim for these last highs around sort of 110-ish as a pullback, 110 to 1 10,200 because the sort of the next supply demand zones would be down in sort of 109,500. I doubt we'll come that low. So yeah, pound Swissy is obviously a good one. Pound JPY longs is obviously a very good one. GA, you could probably favor more downside. Euro GBP downside. So you can see how you'll be selectively choosing which ones. Of course, GCAD higher as well, which we've been looking at for time and ages. But it's not like you just go along the pound versus everybody because of the trade deal. What you need to be thinking about is who at the time before yesterday's announcement would have been most negatively affected. Well, negatively affected would have been New Zealand, the AUD. Positively affected would have been, of course, the yen and the Swissy. So you can see how we've seen a reversal in pound Swissy and GJ higher because they were the most benefited in the environment with all that US stress and struggle. And now we've seen that big reversal coming through. You've now seen a reversal higher in these pairs, and it's not like it's out the norm, is it? So I would still look for those sort of trade ideas. To be honest with you, they're not going to just suddenly change though. I just want to see if there's anything else here for the pound. Obviously, we saw a little bit of reaction on GU today, this little move higher. However, I'd still favor a little bit more downside on that, mainly as the US front. Now, Goldman mentions Goldman mentions the pound. So let me just quickly share my screen. HSBC also mentions it, and we'll have a little look at that in just a moment. But for now, 2 big hawks, 1 small deal. And this week's US-UK trade deal is a symbolic win for the UK, but we think the impact on UK growth and on sterling should be minor. Our economists have nudged up their 25 forecast by 1/10 to 1% to account for a smaller drag on UK exports. But for all the same reasons, we have been highlighting the UK's relative resilience to the hit from the US tariffs, a services-concentrated economy, and limited exposure to US trade. We think this latest UK tariff reprieve should offer little support to sterling. This is particularly true given the 10% baseline tariff remains in place, which we see the strongest signal from the deal overall. Elsewhere this week, the most striking aspects of a resoundingly hawkish BOE were the 2 votes, of course, for a hold, which is particularly notable given many had assumed a quarterly path. Obviously, if you want a bit more detail on that BOE, watch Friday's breakdown, of course. And elsewhere, sorry, I just read that, which is notably given many assumed a quarterly path of cuts at the bank's NPR meeting. Our economists have dropped the June cut from their baseline to forecast a still reflective, still cautious BOE, but continue to expect sequential cuts from the August meeting. On sterling, we see long cable positions as a variable risk-on expression for the coming few weeks. And this week's developments on the whole are marginally supportive for sterling upside, but we continue to think the case for longs is less compelling over the longer horizons for several reasons. Let's have a little look. Namely, we continue to see material risks for the BOE to be than is priced over the next 4 to 10 months. So basically, they're saying that they see markets are underpriced the BOE. So they're expecting to them the BOE to cut by more. Obviously, if that is the case, as markets pricing in all of those rate cuts, that's generally not good for the currency. And key UK data next week on growth and labour will help set the direction of sterling in the near term. Obviously, we saw that pretty decent data today. We do have GDP later on in the week, so let's see what that is doing. But yeah, those are the main 2 datas. And they're saying with our economists, a touch above consensus in Q1 for GDP. So it should still support the pound. Like I said, against number 1, who was benefiting the most in a risk-off environment. So pound, Swissy, and the yen, and of course the euro actually as well was benefiting massively. So if you just think the reversal of all of those trades that happened over the past few weeks, pound Swissy should go up, GJ should of course go up, and Euro GBP would go down, and those would be the main higher probability setups. GU would obviously be like just underneath them for downside, and then GA and G as well would also be sort of near the bottom of the list, or GCAD would also be up there with GU. GA and GN wouldn't be too up there because of how price actions reacted since yesterday. So if I show you that GA, so we obviously saw initially a stronger AUD, so GA came lower. Let me just go here. We came initially lower, and then we saw a reversal. And then, of course, we came to today where we're coming slightly lower. So I'd still favor a bit more downside because of AUD would benefit better in this environment. Similar to NZD, it's just the probability set up in terms of how much risk you'd put on would be pretty much minimal, but it's still a trade idea, isn't it? So overall, that's myself and the pound. We'll have a bit more to speak about on Friday. Hopefully we'd get a bit more update on the tariff scenario. Any news on tariffs would be obviously great. I know Trump is actually in Saudi Arabia at the moment. Let me double check. Yeah, he's in Saudi Arabia. He might talk about more tariffs, like creating the hope of more deals to come. That should support the dollar, should support risk overall. So that's beneficial for like Cheese, Swissy, and GJ upside, isn't it? So in terms of technicals, let's have a little look. So GA, like I said, I'd favor a bit more downside just purely because of AUD would benefit greater in this environment. But yeah, I just want to kind of see price action at the moment. It's not great, is it? It's a little bit choppy over this near-term region here. However, if you do want to get in, the only region I'll be watching would be about here on this supply zone. So let me just delete this. Literally just back up into this supply zone and then a bit more downside sort of towards these lows here first and then the next low down there. And that's probably about it for me in GA. GCAD, obviously, we would favor more upside. And let me go 12.6. You can see there's not, if any, demand zones there. Literally on the 12-hour. We don't really want to be doing that. So overall, what I'll be watching then is we just get these fib from the low of the move to the high. Ideally, what we want to see is a break and close above the high first for us to confirm more upside, similar to here where we moved here, moved here, moved here. I want to see something similar when we move up here. Then we'll be waiting for that slight pullback, and then we'll be getting in anywhere sort of below 50%, anywhere within that region is what we'll be watching. So for now, GCAD is on my watch list. I'm just literally waiting and seeing. G Swiss, like I've mentioned, probably around sort of that 110 to 110, 500 level. Basically, back into this high here, sort of these highs created here. 110 obviously being a big level, and 110, 500 basically back into these prior highs up there. So literally anywhere within there is what I'll be watching price action because there's no demand zones there. So we have to work slightly differently. So if we could see slight pullback, I would be liking it. I don't think we're going to have deep pullbacks, to be honest with you. It's probably going to be relatively shallow. Similar for GJ actually as well. Relatively shallow and then moves the upside. So I wouldn't be thinking like, oh, there's a demand zone all the way down here and let me wait for a push all the way down there. Because of the significance of the news, I just doubt we'll get that many big pullbacks. So what, as a result of that, what I'll be watching is literally this prior high created there. So you can see not a great big pullback. And then we'll be just literally aiming for this region up here. And then maybe we'll look for sells because that is a nice 12-hour supply zone. But we just need to see the reasons as to why the yen would strengthen. At the moment, there isn't. So that's why we're looking for longs on GJ. GN, let's have a little look. GN's technicals are starting to look relatively clean. We're topping out, which could give me an indication of a move to the downside. Let me see if I go on the 1 hour time frame. Might be a bit better. I don't know. It's not looking any better, is it? Yeah, it's not looking any better here. So what I'll be thinking, let me just go on the 12. If we can get a break, or at least some technicals to suggest more downside, because this doesn't really suggest that we should continue just yet. But if we can get something like that and then a pullback into this supply zone, that would be pretty good. Something like that. GU. We were waiting for a bit more downside. We're actually kind of moving around this zone here. Also, we're not rejecting that. Yeah, this looks pretty good, actually. We're coming into these last lows. These kind of create these lows created here, which is good. And we're starting to see a little bit of reversal. Let's see how we play from there. What I'd be waiting for is that to be broken. And then a pullback. And then if there's a supply zone there, we'll wait for the supply zone and then sell off. So I'll be waiting for more downside. I'm just going to be waiting for technicals just to present themselves a little bit better. But that's looking pretty good at the moment. And then target-wise, you could probably target around, 130 would be really nice. But the issue with that is the pound is seeing a lot of positivity. So I'll be aiming for 131 first, basically in this high. And then we'll see after that. And then obviously the target after that would be 130. But yeah, apart from that, that's my technicals on the pound. It's relatively simple to follow it at the moment. It's literally, we've got good risk sentiment. We've seen a hawkish central bank. The data is relatively okay at the moment. So we know that should still support the pound. Perfect. And then we just use that against who is risk off or who benefited a lot during the risk off environment. So Swissy, JPY, the euro as well. So overall, that is myself on the pound. Let's move around to the euro. So the euro. Now, in regards to the euro, just basically think, what is the main driver at the moment? We know the main driver has pretty much been tariffs since the start of April. It's not really changing anytime soon. And the reason the euro strengthened was because of that. People were worried about the US. They went, okay, who's the next best thing? It's because they went to Europe. In addition to that, obviously, before April, you saw all of those updates with the fiscal package, doing a lot of spending, should support their economy, German economy, that is. And obviously, they're the largest contributor to the euro. So whatever Germany does impacts the euro. And that's kind of why the euro strengthened. Now, that pillar, that new sort of pillar, is starting to reduce, isn't it? Basically, the tariffs are starting to get a little bit better. People are like, okay, maybe it's not as bad for the US anymore. Let's start going back into the US. And that is pulling money out of Europe and then going back to the US. So that should be the main driver for the euro for the time being. Data is probably a bit more secondary, meaning you'll see a little bit of reaction, but then it kind of just reverses on itself and then goes sort of in the direction. So I've only got a couple of things to talk about today. So it should be relatively simple. So let me quickly share my screen and we'll have a little look. But I do agree with a few people where it's like euro should be higher towards the end of the year. Just right now, probably not so much. Now, this is HSBC's house views. And if we just scroll down a little bit, we can see sort of towards the end of 2025, they do expect euro dollar to go back to 115. So if we're pulling back to sort of 110, I'd be happy with 500 pips, especially if you can continuously re-enter on that. GBP, I'm assuming that's against the dollar. Yeah, it is. GU, they're expecting about 132. Dollar yen towards 140. So I do agree with that. Dollar yen should go back lower eventually, just probably not right now. Euro GBP around 87. Euro Swissy about 93 year end. So those are sort of their main forecasts. Now, if we just scroll down a little bit, come towards the FX section. And what they're saying is euro is exhibiting a risk-off persona, perhaps aided by the timely afterglow of the European fiscal U-turn, which is what we spoke about in Q1, like they said. Euro looks rich relative to rates, and the economy faces more challenges, but it's not clear what will revive USD mood. Obviously, that was, I believe, that written on the 17th of April. Still pretty valid, but obviously the USD mood relieved it or revived it was the updates on tariffs. And we spoke about that sort of last week and the week before that. And anything else on here that we need to look at? You can pause it and read through this if you want to. I think gold, you can, if you want to. 2025 ending around $3,015 an ounce. We're currently set at 3,200. So they're expecting a little bit more downside in gold. Now, let's quickly have a look at their daily docs. Obviously, it is the 13th today, so it's today's doc. And let's just scroll down to the euro section. And what they're saying here is euro dollar has obviously recovered to overnight to a rather neat 111 handle at the time of writing. Obviously, perhaps helped by a better ZD. A bounce in the investor sentiment reading was always likely given the surge in German DAX index from the lows at the time of the April survey to fresh highs at the time of the May survey. Still, the bounce did not outpace the consensus expectations, and there are also a further run of ECB rhetoric. Kazakhs viewed the market pricing of June rate cut as pretty possible, but the ECB's Nigel argued that the caution given the still higher level of uncertainty, a theme echoed by the ECB's Makhlouf this morning. The euro has also regained some poise this morning, but the challenges remain. It is not clear how quickly the EU and US will move towards a trade deal. And Besson suggested today that the US and Europe may be a little slower. And the main reason for buying the euro was that it was not the dollar, but that may no longer be quite so compelling as an argument, I guess, nowadays, yes, as of yesterday. That's kind of what we saw literally since the start of April, where it's like, oh, USD is really bad. Who's next best thing? Europe, let's just buy the euro. That's pretty much what we saw across the board, wasn't it? So yeah, that's their view on sort of the euro. I don't think Goldman speaks about the euro, if I remember correctly. Guess they're not. Doesn't seem like it. And let me just double check Bank of America. Just not many things have happened in terms of news has happened. It's literally just been the tariffs. And obviously people's then thought, well, euro is very, very overvalued. Why am I going to go long the euro when this is clearly really good for the US, this news? That's pretty much what we saw. And they're not really speaking about the euro too much. We can see, hopefully, if there is some sort of resolution with Europe in terms of a trade deal. But for now, yeah, I'm just going to follow the main story, which is tariffs. And if we continue to see more updates on that, then that is going to continue to support the dollar. Be negative for the euro, of course, especially against risk-on currencies. So if I quickly show my screen, this one over here, and as you can see, with Euro AUD, I mean, we've kind of not really pulled back today, unless you're looking at sort of yesterday evening. We were still showing some nice bearish intent, which is good. I'll be targeting around this low, about 171 a whole for Euro AUD. So if we can get a little bit of a pullback, hopefully tomorrow, literally you can see that there's some lows being created here, literally pull back into 174 and then a push down into 171. Be it just because there's no supply zones there. I mean, I guess this 4 hour, but it also lines up with 174 as well. So about 171 then would be the target. So if I just do this, and there we go. Euro CAD, tiny bit more downside, but not too much. Literally just down into this low, and then that's about it. You can trade it if you want to. I'll probably leave it alone. Euro GBP. Now, we're entering this 84 level. A lot of people have spoken about this 84 level, so it is something to monitor. You probably would see some sort of reactions around that level, which we're kind of seeing already. People are going to need a reason to break below 84 because the next region of interest below 84 is literally this low at 83,250. So, I mean, it doesn't seem like a lot from a pip count, but for Euro GBP, it is. So 83,250. There we go. But yeah, for Euro GBP, it's decent. That's a decent amount. So we are starting to see a reaction out of 84. Maybe sort of the trade deal with the UK and EU, maybe something there, or something happens from the Fed. It's difficult from the Trump, sorry. It's difficult to say. So I'll leave it alone. If we can see a pullback, then I would be definitely looking to get short on a very shorter term horizon. So a pullback into around here would be good, literally there. And then Euro Yen, I'm not looking at, but if you want to go more upside, you're more than welcome to do that. And that's literally on the back of JPY weakness, which is the most overbought currency from this trade deal. And then, of course, followed by like the Euro and the Swiss, etc. But Euro New Zealand, you can definitely look for more downside. As I kind of marked out here already on prior breakdowns, literally this low here, and then this low down here. Similar to Euro AUD, there is a little supply zone here, and that's about it from a pullback perspective. Little pullback there, and a push to the downside. And then lastly, Euro dollar. If we can get a pullback into maybe around 112, basically these lows here, and then a push to 110 would be the ideal situation here. Again, what we need to do is as it trades towards this high, we essentially need to look at the news and think, is the news getting better in the US or is it not? If it's not, then you'd see a break above 112 and it trade higher than that. But if we start to trade towards 112 and we see news coming through better, more updates or more trade deals, etc., then you now need to think about selling it at around that region. Don't have to be exact and think once it taps 112, I'm selling it. If it misses by a few pips, that's fine. If it goes above it by a few pips, that is also fine. But what you need to be watching is reasonings for the dollar to strengthen back again as we trade higher. But yeah, apart from that, that's myself in the euro. Relatively quick to some degree. So to summarize, the main theme is obviously the tariffs. That has been the news flow has come through better in terms of updates and trade deals, especially with China. And that's the reason why the euro weakened off. That was also the reason why it strengthened during April as well, because of China and the US trade war happening. So now that that's been reduced, similar to what we spoke about at the start of this month, where we spoke and we sort of mentioned, just think about the reasons why it's strengthened so much, the euro that is, just think the opposite. So strengthened because of tariffs and trade war. Well, if that starts to get reduced, then why would euro be so high? We've pretty much seen that. So that should continue over the near term. But then we know eventually we want to go back long euro. It's just timing. It's just a timing element now. So that's myself on the euro, a bit more downside, in my opinion. Let's move straight on to the AUD. We'll also cover the NZD as well. So the AUD and the NZD. Let's quickly have a little look at the calendar. There's really not that much. We have a little bit of wage price index, if I remember correctly, tomorrow for Australia. Is it Australia or New Zealand? Yeah, wage price index for Australia tomorrow is expected to come in at 0.8%. Probably not. It's not really going to be a market mover, to be honest with you. And if we scroll down a little bit more, we have some employment data from Australia as well, expected to do pretty decently, or average, shall we say. And then inflation expectations from New Zealand on Friday, quarter on quarter though. So do expect a bit more of a, like on paper, looks like a bigger jump than it actually is. And then as you can see, the rest of sort of that Friday is pretty quiet. Next week, of course, have the RBA, but we'll speak about that on Tuesday's breakdown, of course. But for now, the main theme of the market, we're just going to look at technicals because there's no news on Australia. The reason that is because all it's done is just follow China. And the fact that there's been better trade deals happening with China, AED has also benefited from that. Because remember, if we go back to history, let's just go back to AED JPY as a good prime example of that. We saw all of this AED weakness, yen strength. We saw all of this AED weakness here. NZD is also exposed to China, but not as much as Australia. And AUD as well. We saw all of that weakness. And then obviously we saw a large reversal out of it. But initially we saw a large amounts of AUD. If we look at it against the likes of, let's say, GA, as you can see, GA pumps. And also, of course, seen a bit of volatility around the highs there. And that's because, again, they're very exposed to China, as you know. They're a very high beta currency. They're also very sensitive to the S&P as well, because it's also the S&P reflects risk on, risk off. So overall, because we've seen much better risk on, you can kind of see it actually entails a reversal in AED when we saw a reversal in the S&P as well. Quite interesting. But nevertheless, that's what we focused on. So if we continue to see more updates about Trump, so what we can do is go to, on Bloomberg anyway, go to markets, hover over it, scroll down to FX, and then see any updates on here. So you can read through this. That's anything around the S&P or risk. It's good for the AUD. So if you see further updates on that, or if you go onto the main page and you see news about what Trump says, that's going to continue to give you the idea on, is the market staying risk on, or is it going to start to think of a reversal of that? That we're going to think of reversal. So as a result, the direction of travel for AED and also the NZD is higher. So what you then do is if you just compare those, let me just move this, versus risk off, because these are risk on currencies, isn't it? Risk on, I put RON and ROF for risk off. If we compare risk on currencies versus risk off, we're in a bit of a risk on environment. What you then do is you trade the AED and the NZD, NZD versus, because this is the high probability setup, isn't it? Versus risk off. So who's a risk off currency? Well, technically the dollar, but you don't really want to trade it against the dollar. So the USD remains out of the equation at the moment because it also is stronger in this risk on environment, but because of that context. So who's the next best thing? The yen, and so it's meant to be the yen symbol, and the Swiss. So what does that equal? AEDJ, AJ up, NZD JPY up, AUD Swiss up, and NZD Swiss up. In addition to that, what you could think about is who's overvalued. That's another good strategy. Well, euro, massively overvalued. What does that then mean? NZD or euro New Zealand down, because you want to be buying New Zealand, remember? You want to be short the euro because it's overvalued. And euro AUD lower. So you can see how there's a lot of trade ideas there for you. Now all you have to do is just think about technicals. So you know the direction where it should go. You're just thinking about technicals now. So now you just do whatever technical analysis you want to do because they all work to a certain degree. Technicals work to a certain degree, of course. And there we go. That's literally all you're thinking about. So if we work with that assumption, if we go AED CAD, obviously CAD's a little bit weaker. That's fine. You can trade AED CAD if you want to, but we're thinking about high probability setups here. So AED JPY, if we can get a pullback into here, if you're not in already, it's that 4 hour little pullback. Think about the next high. The next highs would be around sort of 95,500 to 96, basically into here. There's another trade. I don't have AED Swiss on my calendar, not my calendar, on my watch list, as you can see. So let's just quickly have a look. And you can see how AED Swiss is up as well. So you should have the idea or the direction before you even look at technicals, because now your vision's not clouded and you might not think, oh, there's a fair value gap here, and now let me sell it out the fair value gap, or if there's a supply zone here, let me sell it out the supply zone. Nothing's telling you to sell it. You need to go with what the direction is. So if we can get a pullback then into here, that would be good. We have a gap here. We might be able to fill that. We haven't really filled it yet, but that would be a region for you to watch if we go lower. And then if we look at, obviously, AUD, NZD, I would leave alone, but it's understandable why it's slightly higher, just because of AUDs are much more sensitive. AUD USD, you can see, is a little bit more on the choppy side, so I'll leave it alone. It's understandable. Dollar and AUD is also strengthening. So if we can then go on to NZD, I think I do have NZD JPY on the watch list. I do. NZD JPY upside would make sense. We know we eventually want to go selling, but for now, we're playing the tactical theme. So similar to AUD JPY, pull back into this demand zone would be pretty decent. And if we go higher, is there anything else? Obviously, we have this gap here. That's fine. If we come lower, then that gap will be the sort of region you'll be watching. NZD CAD, you can also trade, but it's completely up to you. That's a bit of a lower probability, so I'll leave it alone. And NZD Swiss, which I don't have on my watch list, should go higher. So in that assumption, similar to AUD Swiss, actually, we have here. So you can see how now your trades are all following the same conjuncture of risk on until otherwise. Euro AUD lower, Euro New Zealand lower. You can see how many trades there are for you. It's just up to you to take them. So overall, that's myself on the AUD and the NZD. Pretty quick and very simple. All you need to do is just follow China. If you see further updates, it doesn't have to be China, actually. It can be the US in general. So if you see more positivity coming through with negotiations, Europe in particular, because that's a really big partner as well, that is going to be very good for the AUD and also very good for the NZD as well, because they're very that would support risk sentiment. And those trades that we spoke about has more upside, and of course Euro AUD and Euro New Zealand more downside. Those are the trades ideas. There's definitely a lot of yield to capture. So that's myself on both currencies. Let's move straight on to the Canadian dollar.